what that means is stocks reflect public companies. And I like to compare it to if I'm going to buy a business and the business is making $1 million a year or growing 10% a year. Any business evaluator is going to say, okay, well, 2 times earnings, 2.5 times earning, that's what you're going to pay for this business. So a business that's making $1 million, I want to buy it. Roughly, it's worth $2 million. And that's fair, everything like that. These businesses that are on the stock market are currently trading for at like 20 times earnings and 20 times profits. So this makes the stock market at this time very overvalued. So there's a lot of counterparty risk to investing in the stock market. What that means is you put your money in the bank, you trust your bank, you put in $100,000, they will leverage that out many times, and they'll be buying these overvalued stock market. And it's very distorted stock market. So it's only being propped up right now by money printing. And for an example, just before this interview, I just came back on a recent quote from Ray Dalio. He's one of the 100th richest people in the world. He started one of the biggest hedge funds in the world, which is Bridgewater Associates. And he was quoted recently, and today's valuations, when adjusted for the level of economic growth and heightened profit margins, defy comparison with any period since the Great Depression. That says a lot. Like I said, every major economist in the world knows that's overvalued. And this is the reason why, because it's like 20, 30 times earnings, most of these stocks. So therefore, it's being artificially kept afloat by money printing, by the U.S. government, for example, has a stabilization fund or the plunge protection team. So if things start to get, and this is why it hasn't dropped yet. We all think this is going to crash for the last 2-3 years, and it should, and maybe it will, but it's just being so propped up by artificial money, and it's all fake now.